Market news now. The rand traded lower earlier today as the US dollar weakened ahead of the key US inflation data that could influence the Federal Reserve's future interest rate hikes. The US CPI report for October is due at 3:30 South African time. Economists expect core inflation to decline on both a monthly and an annual basis. Meanwhile, China is again grappling with a COVID-19 surge. We had Apple supplier Foxconn planning to update its fourth quarter outlook after strict COVID-19 curbs remained in place at its major plant in China despite the lifting of a lockdown. Locally, pulp and packaging company SABC resumed paying out dividends after an improved performance in its 2022 year despite several headwinds. To talk to us about the latest, we're joined by Han Tan, who is the Chief Market Analyst at Xfinity. Han, thank you so much for your time. Given the fact that we are waiting for US CPI data and we're also reading about what's going on in China on the ground, what would you say is the market sentiment right now and what's driving that?
Yeah, overall, there is a sense of caution. You're right to point out there are so many cross currents affecting different asset classes. So, for example, the China economic fears weighing on oil prices and even concerns out of the crypto space. But overall, prime and center is the US inflation story. We've got CPI data due out later today. And as I already pointed out, it will inform not just the Fed about its next policy moves, but also broader markets. And markets are, of course, ready to react to that CPI print later today.
So you have investors and traders awaiting US midterm, results. Have you worked out scenarios in terms of what happens in terms of markets if the Republicans gain hold of the House and the Senate, or if the Democrats retain control of the House and the Senate?
Indeed. So earlier this week, we actually sent out a piece to clients and we had outlined 3 scenarios. But of the 2 that you mentioned there, it seems like as things stand, again, the results are yet to be officially or fully known. But as things stand, it seems like we are headed for a US Congress that is gridlocked next year. Now, what does that mean? A couple of things. Number one, it suggests that if this gridlock is really strong, and if the US economy falls into a recession next year, then the likelihood of more government spending to help cushion the fall for the US economy will be significantly dwindled. That's one potential outcome. And secondly, that also raises the risk of a standoff over the US debt ceiling. Now, if that is as bad as the 2011 episode, where even US sovereign debt was downgraded over a decade ago, I think that will be a major risk-off event for markets. But again, that's a 2023 story, depending on the final outcome, which we might know either in a few days or weeks.
The dollar has had a very interesting performance, especially for the better part of this year. What do you make of its current fourth quarter performance?
Yeah, just to give a headline figure, so far this quarter, the dollar is down by about 1% since the end of September. Now, year-end, seasonally, it tends to be a period of weakness for the greenback, especially in the month of December. If you take the average over the past, be it 5 years or even 30 years, you do see December having the worst monthly drop on average for the dollar. But then having said that, of course, the economic conditions and the factors that we outlined just now is very different for this December compared to December's past, i.e. you've got a Fed that is still intent on raising US interest rates to beat inflation. There are also fears about the global recession. So I think those 2 combine to offer a supportive environment for the US dollar, at least for the foreseeable future.
I mentioned in my intro that we are expecting US CPI figures at 3:30 South African time. How important is that CPI figure and what is the market expecting?
Indeed. So some numbers here. Overall markets are expecting, or at least economists are expecting, a slight easing in these headline numbers. And those headline numbers are 7.9% for the headline CPI. or 6.5% for the core CPI. But I think even if you take those numbers at face value, they are still much higher compared to the Fed's 2% target, right? So I think markets want to see how sticky or how stubborn these inflation numbers remain at such elevated levels, and really they will derive from those numbers whether the Fed rate hikes that have been ongoing for much of this year have had any real impact in subduing inflation.
Outside of US CPI figures, any other events that you are keeping an eye on either this week or going into next week?
Yeah, so I think the CPI takes the cake for this week. For next week, still plenty to look out for dollar-pound traders. For those who are more interested in the UK markets, there is the fiscal announcement next week. We'll have to see whether it gives the UK government standing a more credible position. Otherwise, we could see the pound just really tumble once again. Then also going into next weekend on the 19th, we'll be seeing, at least for the commodity space, whether or not Russia will extend the agreement to continue letting Ukraine ship its exports via sea. So that could impact grain prices, and that would feed into the risk of a food crisis for the world, and ultimately into the broader commodity markets as well. But I think overall, it's still very much the Fed front and center between now and next month.
Han, let's leave it there. Thank you so much for your time. That is Han Ten, who is the chief market analyst at Xfinity, giving us his perspective on the numbers. And while we were on air, we did get earnings coming out of MultiChoice, interim earnings coming out of there, and that share price down marginally about 0.25%. But we'll unpack that for you tomorrow alongside the US CPI figures. But that is it from me. We're going to take a quick break. When we come back, Nompumelelo Siziba will be with you until 3 p.m.